the housing market is about to bust. And I don't mean that in a bad way, unless of course you're a homeowner and you're looking to sell your property and you're not prepared, or you're a home buyer and you're looking to buy a home and you're not prepared. I'm going to share with you in this video why this happened, how you can combat it, how to save a lot of money, how to prevent losing a lot of money, and how to prevent a lot of stress. So you have to understand, from 2009 to 2022, interest rates never went over 5.25%. 64% of people that have a mortgage have less than a 5% fixed rate on their home. They're building equity. Now, if you're a homeowner, you're thinking that's great. However, when they doubled the rates, literally starting in 2022, your home became more expensive. I don't mean it became more valuable. I mean it became more expensive. And look, by expensive, I mean 20% increase in the price of your home. If somebody were to purchase at a $350,000 home, if you were to purchase that at, say, a 4% rate, you're looking at a mortgage payment of around $2,200 a month. You take that same payment at a 6.5%, 7% rate, and you're literally looking at about $3,200 a month. The point I'm trying to make is interest rates went up. When interest rates went up, home prices went up. That's why they say they left the rates too low for too long. Now, what's going to happen next is everybody wants the interest rates to drop. You have to understand, title company, mortgage company, anybody, real estate agents. You realize 71% of all real estate agents that had an active real estate license last year in 2024 didn't sell a home. Yeah, people are starving out here when it comes to the real estate industry, because bottom line is, people aren't buying houses, people aren't getting title insurance, people aren't closing on homes, people aren't getting mortgages. They're also not refinancing houses because they have a super low rate. But here's what's going to happen. They want the rates to go down. They want the rates to drop. The minute they do, so much as a quarter of a point, you're going to have a feeding frenzy. You have to understand, everything is pent up. Everything has been shut down, locked down. People haven't been moving. You've heard me other videos. If not, I'll put a link. People have been trapped in their homes. People have been locked down where they're like, man, I can't afford to sell my home. I can't afford to buy another home. If I were to sell my home, I can't afford the home I'm actually living in if I were to purchase this same home. The point I'm trying to make is, once the media gets out there and they sink their teeth into it and they let everybody know the interest rates have gone down. Right now, if you're looking at a 6.5 to 6.75 rate at July, August 2025, and that rate so much as goes to 6.25 or even 5.9%, the market will explode. Now you're probably thinking, that's a good thing, Wayne, let it explode. That would be awesome. Closing, title, mortgage, everybody, woo, get it while you can. Bring the Wells Fargo truck, as they say, to closing, you know? But here's what's going to happen. If you're a homeowner and you go to sell your property, more people are going to be putting their homes on the market, so you're going to have more competition. Right now, the inventory of houses is low. There's a lot of markets, some of the slowest markets, Nashville, Orlando, Florida, Naples, Florida. Some of these markets are slow. And by slow, I mean the houses are staying on the market 65 to 70 days, which is a healthy market. You want a 3.5 to 4.5% price appreciation. And that's what we're still seeing for the most part on average around the country. That being said, the average home price in America is $500,000. Now, let me ask you a question. Can you afford a $500,000 home at a 6.5% rate? Because a $500,000 home at a 6.5% rate is going to cost you anywhere from $4,300 to $4,800 a month, depending on where you live. And when I say depending on where you live, gets me on the subject and the topic of insurance. But the big one is property taxes. You see, when home prices go up, you gain value, you get equity in your home, and that's what everybody wants. Unfortunately, when your home prices go up and the value of your home goes up, so do your insurance to cover your asset. So does the taxes, because everything now is ran through, connected with, and filtered through the multiple listing service. When a home closes, you bet the tax assessors see what you just bought your home for. Now, that's also part of the reason how and why Zillow has these estimates, and you see a lot of sites that say this is what your home is worth and that sort of thing. I'm going to walk you through this house really quick. This is a home in Pearl River, Louisiana, which is just outside of Slidell, Louisiana. We're about 45 miles north of New Orleans, Louisiana. This home, really quick, is a 4-bedroom, 2 full bath, just under 2,600 total square feet, 2-car garage, and they did everything. They painted, they wiped down, they replaced flooring, take out old carpet. Listen, you have to understand, when somebody buys a house, and you'll probably agree with me, if so, give me a thumbs up. If you like this video, please subscribe. I promise you, you'll always learn more and more information about real estate that will benefit you. People buy on emotion. When they walk in, They don't even know they're doing it, but subconsciously we breathe and we can smell an odor. And anytime you can smell an odor in a home, I always tell folks, you want to make sure you clean air filters, clean ductwork if you have to, put in fresh paint, clean everything, throw out old rugs, put in new rugs. You have to understand when you do all of that, it makes the home smell fresh, clean, new, and inviting. These folks have done all that. Wiping down blinds, dust. When you start moving things in and out of a home, you stir up a lot of dust. Wiping off countertops. The big thing that people miss is wiping down windows, cleaning windows. And those fogged windows, you want to get those replaced before you start showing your house. Now, the purpose of me sharing all this information for you so you can be prepared. Don't wait till the last minute, because what's going to happen is as soon as the rates drop, more and more people are going to want to buy. Many of those buyers are actually homeowners, so those homeowners are going to want to sell. And you have a lot of people that are buying their houses. Last year, not only was it the lowest market for home sales in 29 years, it was also the lowest market for first-time home buyers, mainly because, as I mentioned, the interest rates went so high so fast. They doubled the rates. They started going up in April 2022, and by literally October, they had doubled. Same year. Within 7 months, the interest rates had doubled. So yeah, you're talking about 20-25% increase on payments on homes. That has stalled the market, and it's been that way ever since, and here we are in August of 2025. But open up, bright. If somebody's going to show your house, you want lots of windows, you want it all open, airy. People don't want to see dark and gloomy. You want to make sure your thermostat's adjusted and turned down. Everything's got a fresh coat of paint. And most importantly, let me share this with you. I'll step outside. You'll want to clean and pressure wash, and I mean everything. The fascia boards, the fascia, the windows, the driveway, the patio, the deck. You'll want to trim up trees, make sure they're not over the house, because if it's an FHA or a VA loan, most of the time those appraisers are going to say you got to get those limbs and trees off the house. You want to make sure everything's back away from the landscaping, because if they see all this brick and gravel, then they're going to question whether or not you have termites. Listen, at the end of the day, you just want to make sure that there's nothing that gives a buyer any sort of doubt or negative in their mind. Unfortunately, people see things how they are, not how they're going to be, and they will horribilize it. And when they horribilize it, a $5 fix is actually $500 in the buyer's mind. But look, it's so important to understand it's not just for the actual sellers, it's for the buyers themselves. You have to know, you have to get approved. There's a difference between being pre-qualified and pre-approved, all that. Listen to me, qualification, you're just talking with a lender and you're telling them, this is what I make, this is what's coming in, this is what's going out. The approval is when they actually verify your income, verify your taxes, that you've actually worked, paid taxes, you have a job, verify your income, pulled your credit. They are going to pull what they call a hard pull on your credit. They're going to check what they call a tri-merge credit report, Equifax, TransUnion, Experian. They're going to pull all those. Now, I always tell people, good word to the wise is do it yourself, pull it yourself. Go to Credit Karma, MyFICO, or any of those. You can Google them and just see how your credit score looks. You want to make sure your credit score is at least 600 or higher, because 600 or higher will allow you to purchase a home right now with an FHA loan. Now, there are other loans besides just FHA. There's conventional, but a conventional loan, your credit's got to be a little bit better. If you're VA, it doesn't have to be as high. You can actually buy a home as a veteran and get into a house with only a 580 credit score. Now, what's really cool about being a veteran is you don't have to pay that private mortgage insurance, because the federal government, the United States government, insures those loans. You served your country. They say you should be able to purchase a little piece of the land. They give you a 100% loan. However, there are closing costs. The good news is I have agents all around the country, and a really good agent, real estate broker, can protect your interest, write the contract for you, and have the seller pay your closing costs. I can assure you there's a lot of sellers out there that are more than happy to pay your closing costs. And those closing costs typically run around 3.5% of the loan amount. In your case, if you're doing VA and 100%, you're actually putting down no money, and your 3.5% in closing cost is going to be on 100% of the amount that you're borrowing, which is whatever price you agree on the purchase. Now, it's also too important to understand that even though you get a VA loan, you don't have to do 100%. You can still put 20% down on a VA loan if you want to, still get a good rate, still have your VA eligibility, and actually own that home and not have to pay private mortgage insurance. Now, it's also really important to know that it's called being approved, and it has nothing to do with the actual house itself. So many people think, well, I got to go look at the house. Listen, we are not buying cars. You understand? If you learn anything from me, my name is Wayne Turner. I've been in this business for 30 years. I've helped thousands of people buy and sell their homes. And I only share that with you so you can know that the information, the stuff that you learn from me is actual, true, factual, and beneficial. This is no AI stuff. I'm not reading it from a book. It's just boots on the ground, decades of experience. That's the little gray in the beard, right? But you have to understand that you want to get approved. It has nothing to do with the house. It has everything to do with them loaning you money. They're going to lend you money, period, as long as you find a house that you like and it matches and meets the criteria of the loan. Now, what I mean by criteria of the loan, and listen, if you're a homeowner out there, don't get scared and worried about an FHA loan or a VA loan unless your house is just absolutely deplorable. Busted windows, leaky faucets, holes in the roof, no flooring, appliances missing. You can't go FHA or VA. You do good to get somebody to get a conventional loan on a house that's like that. But I'm talking the average everyday home where it's got flooring and paint and walls and it's in relatively good shape. And that's why I tell folks you can still buy foreclosures and get FHA loans and VA loans. But you truly just don't know unless you have a good real estate agent to walk through it with you, or you pay an appraiser to walk through it with you, or somebody to walk through that house with you. Because the last thing you want to do when it comes to foreclosures is oftentimes when you buy one of those, you don't know what's behind the walls. And here's what I mean, because oftentimes many foreclosures have had roof leaks, and those roof leaks mean water. And when you have water in the house, it turns to mold. And here's the reason why: there's no electricity. You don't know how long the home has been sitting empty. And where it may smell a little moldy, a little mildew, just a little musty, trust me, it's probably a lot of black stuff called mold, black mold, growing behind the walls. Now, I'm certainly not trying to frighten anybody or scare anybody or fearmonger or anything like that. And I'm certainly not trying to sell you anything. I'm just giving you factual information because I've seen it happen. I've seen the rise and the fall and the rise and the fall and the rise and the fall. There was a gentleman that was head over the Federal Reserve called Alan Greenspan. That was his name. Alan did a great job. He'd raise the rates and lower the rates. Literally, it was like every quarter. He'd raise them and lower them, raise them and lower them, raise them and lower them, raise them and lower them. You know what happened? Every time he did that, people bought houses because people run off of FOMO, fear of missing out, right? And so when the rates would go down, people would buy. When the rates would go up, they would buy. They don't want to miss out. They don't want to pay too much. They don't want to get hung out. So I always tell people, at the end of the day, if you want to buy a house, you can purchase a house. Of course, you can always refinance. And listen, there's a lot of people out there that are watching this that are probably my age or older. I'm in my 50s. And you remember when those rates were 8, 10, 12, 15, 16%. Back in 1981, I think it was the highest it's ever been. It was like 18% interest. And even then, there were more than 4 million homes that sold that year. The point I'm trying to make is don't get so hung up or caught up in something or buying on emotion that you don't want to purchase. You have to know that, ask yourself, why am I buying this home? What am I going to use it for? And how long am I going to live here? If you're going to buy a home and own a home and you're not going to live in it, but for maybe 2 or 3 years, you're probably better off to rent. Now, one of the things I always tell folks is if you're job relocating and you're going to be in the area for just 2 or 3 years, you may want to consider an adjustable rate mortgage. But even then, I always have people to steer clear of those because adjustable means it can and will adjust. You don't know if it's going to go up. You don't know if it's going to go down. But I can tell you for the most part, we're probably going to see rates hover around 6.5% once the market shifts and people know that that rate is out there, and they will blast it across all the media, even more so than they did years ago, because now everybody's got a YouTube channel and everybody's got an Instagram channel and everybody's talking on Facebook. And I promise you, these markets that are slow are going to start moving. A lot of markets are going to start moving. I'm Wayne Turner. Hope you've liked this video. God bless you. Give me a thumbs up. Subscribe to the channel. It is my goal to teach you something that you can benefit from about real estate on every episode.